Casey, hey, over here. Hi. Remember us, small people? I have a quick question.
Yeah.
For those of us that are deeply integrated into cryptocurrency,
Yeah.
what do you have to say to us that are like on the edge of the cliff?
Okay, well, given with what just happened with FTX, FTX just essentially lost $16 billion. So a lot of investor confidence is gone right now in the crypto market. But in these times where everyone is running from something, you always want to remember what great investors do and say, like Buffett. Whereas be greedy when others are fearful and be fearful when others are greedy. So everyone's running away from this right now. I think we're going to see a very beautiful buying opportunity in the crypto market because of investor confidence being depleted, because of the FTX situation. And just keep in mind, this is actually a good thing because it's going to cause regulators to come in and actually regulate cryptocurrency. And I believe XRP is going to be the winner. If it's not, I don't think Bitcoin won't win. It's either going to be Ethereum, XRP, or I think one of those two. I really don't see any others winning based on the use case of the different technologies of all the cryptocurrencies. Sure, well, believe it or not, Doge might be a contender because of Elon.
Really?
Yeah, because Elon owns Twitter now. So imagine he makes it to where you can tip people through Doge, or Twitter only accepts Doge payments, or to pay that $8 for the blue check a month, you have to pay it in Doge currency. Anything he says or does right now is going to influence the price of Doge, which you can't undermine that or undervalue that. It's really unquantifiable how powerful that is. But I feel right now, in terms of XRP, I think it's going to be a very good time to dollar cost average in, which means buy the dip. If you already are hemorrhaging and you bought at some highs, which a lot of novice investors do, they just see numbers going up, but they're not actually looking at the charts. They're not seeing market structure, they're not paying attention to market sentiment, they're not paying attention to interest rates or CPI, NFP, non-farm payroll, any of these things. They're just looking at numbers on Coinbase just going up and they jump in, which is retail traps for novice investors. I would say the best way to mitigate that risk right now is the dollar cost average in. And so what that means is if you bought way up here, you need to start buying down here. Start buying the dips so that your average entry is going to be like somewhere right here. Even though you bought way up here, because you're not buying the dips, you start to average out your entry position. It's the only way you can hedge this bet unless you cash out and just realize the loss, which a lot of people don't want to do. Unfortunately, a lot of people who kept their money in FTX are shit out of luck. That's why I always recommend, and me personally and all my friends and students, to keep your money on cold storage. For instance, like Nano Ledger or something that you can keep for yourself. That way, if these exchanges go down, if they're playing around with your money, because you got to remember, these exchanges are just like banks. The funny thing is everyone's complaining and talking shit about FTX, but literally every bank does exactly what he did. Every bank takes your money, lends it out, trades it on the foreign exchange market, lends it to small business owners, collects interest on your money, gives you none of it, and they jeopardize their money because they're risking it. It's called fractional banking. If you want to get all your money right now, you can't get it. If you go to the bank and say you put $10,000 today, it won't be there tomorrow. They only have to keep $1,000. It's called fractional banking. That's exactly what FTX did. But FTX did staking, which means that you put your money in there, you can collect interest on it. It's kind of like a CD, right? An old school CD, kind of. But I knew this was going to be a huge headache, a huge problem, because how do you collateralize an asset that is so volatile like this? An asset that lost 73%. Bitcoin has dropped 73% from its 52-week high. You can't stake that. You can't collateralize that and collect interest off of it and lend it out. That's just asking for a huge headache. And what happened was Binance played chess with them, and he outplayed him. He checkmated him. So Binance sold off all their FTT coins, which basically created what's called a bank run, where everybody goes and gets their money for whoever is holding FTT. So everyone's selling off FTT. Binance sold off I think it was 500 million, if I'm not mistaken, of FTT's coin. So everybody else sells off their FTT coin, which is FTX's coin, which essentially caused a liquidity problem, which made FTX disallow withdrawals, right? So it created a bank run, and I think they did this purposely. I'm almost positive they did, because he's now the biggest exchange. Binance is now the biggest crypto exchange because they eliminated one of their biggest partners. They know they were over-leveraged. They're over-leveraged, staking, doing all kind of stupid monetary policies that are going to cause them to basically crumble and capitulate. So, again, back to the point, dollar cost averaging in right now. I think we're close to the bottom. A lot of people are saying, a lot of people are talking about it. The Fed are talking about easing up on interest rates and easing up on this recession, combating the recession, I guess you could say. So I think now is a good time to start to dollar cost average in to level the playing field if you're hemorrhaging and you lost a lot of money. Me personally, I bought in lower than we are right now in XRP. But I did buy a little bit higher as well. So I dollar cost average going up, but I stopped at around 80 cents. So it's not so bad for me. But I know some people who bought like almost at $2. So they're in trouble. But you're going to have to wait out the storm, dollar cost average in, and find some other lucrative investment vehicles. For instance, trading, day trading, Forex, and bots and algorithms and stuff that we got going on. But I think that would be my best advice for anybody who is hemorrhaging right now on this crypto bloodbath that FTX is kind of called.
Thank you so much for explaining that. Thank you. That was so insightful.
Yeah.